This is the Haulin Assets podcast where we show you how to start and run your own trucking company. Ever wanted to go out on your own? Follow Chris as he goes through the highs and lows of running on his own authority. Welcome, everybody. Welcome to the Haulin Assets podcast. This is episode number 70. Today we're talking about January financials. I'm Craig. Over there he is.
Still Chris. You haven't got rid of me yet.
Not yet. That's not for lack of trying, though. All right. Thanks for joining us, everybody. I do want to remind you that you can go to HaulinAssetsLLC.com to check out full show notes and past episodes. If there's any documentation, like there will be today, when we're talking about, profit and loss statements and balance sheets and all that stuff, you can find all of that at HaulinAssetsLLC.com. So we also encourage you to go to Facebook, because in either of those places, Facebook or HaulinAssetsLLC.com, you can comment and let us know, what you think of the episodes. If you have any suggestions, any questions that you want us to address. Chris, before we get to the meat of today's episode, how have things been going out on the road?
They've been going pretty well, and you're going to see in the January numbers, Mike ran incredibly hard in January, which spoiler alert, made for a pretty good January.
Hey, that's nice.
Yeah, and but we it's the winter time, and things get really, really crazy in the winter. We've been able to avoid some storms, but he just got stuck in Wyoming for a little over 24 hours. You got about halfway through Wyoming, and they shut the road down. I think we talked about it a couple episodes back, but the same thing kind of happened a couple episodes back, and he just barely missed the shutdown and made it all the way through. Yeah, this time I didn't think it was good. I actually knew last time it would probably get shut down. This time I didn't think it was going to get shut down, and then it ended up getting shut down. And it's one of those situations where there hadn't been a whole lot of new snow, but sometimes when that wind just blows so hard across the interstate on I-80 that as people are driving across, it's blowing snow across, and trucks and cars pack down the snow, and it eventually actually almost kind of turns the freeway to a sheet of ice. And I'm assuming that's kind of what happened. I know it was blowing really hard, and winter, you just never know, and that kind of thing's never fun. So it turned this particular load, because it was a 2-drop load, 2 stops, which we don't do a whole lot of, into a nightmare.
Well, yeah. And I assume that a lot of people who are listening to us know about I-80 through Wyoming, and what a crapshoot it can be. But if somebody, does all their driving out east
of the Mississippi,
not that there aren't things out there that you got to worry about, hurricane season or whatever, but there's nothing quite like I-80 in Wyoming as far as...
It's special.
Yeah, as far as just horrendous conditions go.
Yeah.
So anyway, that sucks he got stuck, but that was in February then?
Yeah, February, beginning of February.
We might hear more about that when we talk about February numbers next month.
Yeah, potentially. He's still on that load. Gonna drop off the second leg of it. The first drop was Walmart, which just further complicates things, because Walmart doesn't like to reschedule and causes all kinds of problems. So we still don't know how this load's going to turn out. Well, we'll see.
We shall see. Now, Chris, before we talk numbers for January, you mentioned that we had gotten a very interesting note from, was it Eric?
Yeah, a listener, Eric, just gave a really thorough comment on Facebook, and had a lot of thoughts and ideas, and a lot of them are really good. And I want to talk about one of them today. And hopefully as time goes on, kind of address some of the other things that he talked about. I really appreciate it. I mean, he took a lot of time, and it was a pretty good long comment with a lot of good thoughts in it. And so I appreciate the time he took and the feedback he gave. A lot of good things. So yeah, one of the things I want to talk about today.
And is that for now or for later?
Let's talk about it now.
Okay, what'd he say?
He asked some questions about depreciation and kind of why I do depreciation the way I do, which is a really good question. So
do you do it different from the norm?
Well, there's a bunch of different ways to do it. I would actually say probably the way I do it is more on the normal side. Because what it is if you remember with depreciation, on a semi truck, it's worth $100,000 today. Over time, it loses value. You get to expense that as what's called a depreciation expense. And that depreciation expense is kind of tied to your payment on the truck. If you're making payments on it, your payment, part of it goes to interest, part of it goes to principal, and that depreciation expense kind of helps offset the principal piece. But to make a long story short, it's not really a cash expense, right? You're not to write that depreciation expense on your tax returns. It's not really cash going out the door, right? With your other traditional expenses. So what most businesses do, at least in my experience, I could be, I'm making some assumptions here to be completely honest with you, but I've always done it this way. Most places I know do it this way. They don't expense their depreciation every month. Typically at the end of the year when you do your taxes, you just do one fell swoop of depreciation.
Right. And you do it on a monthly basis?
Well, no, I do it that's how most people do it with the annual. I do it annually. And he brought up, well, why don't you do your depreciation expense monthly? And actually he's the second person that said that. There's another listener named Brian that he's actually a CPA as well.
Oh, boy.
And
so
months and months
careful.
ago, you got to be careful. Yeah, we've got an educated audience here for sure. He actually near the beginning of the podcast, so over a year ago, had made that same comment, and there's some definite pros and cons to that, and I think at some point I'd like to kind of start showing that depreciation on a monthly basis, because it does give you a little bit more true picture of what your actual profit is. So, like for instance, this month we're gonna let's take last month's numbers. I think last month we were around $6,000 in net profit, if I remember right. If we would have done our depreciation expense, it probably would have cut off. I'm just pulling a number out, $1,500-ish in profit. So it would have lowered our profit, which is good because then you're reporting a smaller profit to the IRS. You're paying taxes on less of it, but you're not really forking out cash like you would with any other expense. So it's a good tax benefit. And it will show you a little bit, depending on how you want to look at it. And, people are going to make arguments both ways, but it does show, just kind of another picture of kind of how the business is doing. And it'll give you a little bit better idea of what your true tax bill will be at the end of the year. So there's definitely pros and cons of doing that.
So why do you do it annually? Is it just for simplicity?
A couple reasons. Simplicity is probably the biggest factor, but there's another reason. You take, for example, in my situation, I'm a little bit different than your typical owner-operator, your typical small trucking company owner. We bought a new truck and a new trailer at the very end of 2020, and there's different ways you can depreciate trucks and trailers. And your typical way of doing it is over a 5-year period. That's what the IRS, that's your, I don't know the best way to put it. That's what the IRS typically wants you to do. So
okay.
that's normal. What you do is you depreciate it over 5 years. Well, there's a way that you can actually expense the whole thing in 1 year. And you wouldn't normally want to do that because you want that tax benefit spread out over a year. Because for instance, if we take that full depreciation this year, it's going to give Haulin Assets a loss, and we don't need that big of a loss in 1 year. But in my situation, I actually am probably going to use that rule and depreciate the entire truck and the entire trailer in 2020 to offset some of the income for my other businesses that my other businesses had in 2020. If Haulin Assets was the only company I owned, I probably wouldn't do that. But because it is, I can use that tax benefit and I can spread it. I can use the expense benefit from Haulin Assets, the depreciation benefit, and apply it to other business income.
So for the typical one-man show, one man, one truck, owner-operator out there on the road, would you recommend going your way, or would you say, you know what, monthly is just fine for that situation?
Either way is just fine. It's really a personal preference. Just for me, the biggest reason, like I said, I don't do it that way is convenience. I've just kind of got things set up right now so that at the end of the year, I just do it all at once.
Yeah.
And
It's the way you've always done it, so that's the way you're going to keep doing it.
Yeah.
Inertia,
Tradition.
Chris.
Yeah,
That's-
tradition. I hear Fiddler on the Roof going off in the background.
When do you not, though? Let's be honest. Okay, very good. Anything else you want to say on that subject, or should we forge ahead?
Let's forge ahead. Just keep in mind, I would like to at some point probably kind of show the two at a minimum, the differences, and maybe explain that a little bit more. So maybe jump into that a little bit further in further detail as some future podcast episode.
Well, for all of our CPA listeners out there, that'll just be a riveting episode, I'm sure.
It's interesting is, looking at comments and things that people are saying, the further and further we get into this, I'm getting more and more comments about people wanting to know more about the accounting side of things, which is fantastic, because I think ignorance in accounting is one of the things that gets a lot of people in trouble in business. Yep. And so to hear people wanting more of that, that's a good thing. And we'll provide more accounting thoughts and, financial thoughts as time goes on. So, it makes me excited, makes me happy that people are, kind of hearing that message that numbers do matter, and accounting does matter. And it's important to understand accounting and how, even if you're going to use an accountant to do most of your stuff, the more educated you are, the better you're going to be able to utilize that accountant.
Well, there you go. All right. Well, let's talk about January numbers finally, now that we're 10 minutes into this episode. Let's talk about our January numbers and how things went. You previewed that saying that it went pretty darn well.
Yeah, one of I didn't go back and look, but it may be the most miles we've run in a month.
Really?
Yeah, it was a really good month.
So how many miles was that?
12,929 miles, almost 13,000 miles.
Okay.
So,
and as I recall, 12 is the number that you're usually shooting for as not a max, but it has been the max historically.
Yeah, and 12's, anything 10 is probably kind of the bare minimum of where we would like to be. So anything over 12 is typically a good month, and this month was pushing 13.
Yeah, awesome. So with that, what percentage of that was deadhead, or was it
only 3.5%, 3.49 to be exact?
3.4. Don't forget the that 100th.
It's important. 451 miles and deadhead was all.
That's not bad at all.
No.
Okay, so what did that equate to in total revenue?
$25,575.32.
Ooh-wee.
That's a record.
That is a record by so that's good. Quite a ways.
I'm trying to think back again. I should have researched this a little bit better, but I think our previous record was under 23,000, just a little under 23, I think.
So yeah, fantastic numbers. 25,000, nearly. Well, yeah, it's over 25.5. So man, that is great. Now, tell me about the expenses. Anything horrendous happen in January as far as repairs, maintenance, anything else?
There were a couple kind of weirder things. One, our fuel expense was probably about almost $1,000 more than it really should have been, because kind of what happened was, when I fuel at the yard, I don't pay for the fuel right away. They bill me for it. And so I'd filled the truck pretty good at the latter part of December. The payment didn't come out till January, so it came out in January. Plus, kind of, something similar happened at the end of January, except for it was actually fueling out on the road, filled the truck up like on the 31st. And so that fuel didn't really get burned till February. So it kind of skewed that number just a little bit, but,
Yeah. No, that makes sense.
Yeah.
Now, I'm getting ahead of myself a little bit because I was wondering how much we, dug into that 25,000 revenue number. But let me pull back a little bit and just ask you what the rate per mile was then. I'm not doing the math in my head, so I'll let you do it for me.
It was $1.98 a mile, so not quite as good as December, but still, for January, it's a good month. January is obviously, January and February are typically the 2 months where rates take the biggest hit, which it is a big hit, but still $1.98 all-in rate is not bad for almost any time of the year typically. So, it's still a really good day.
Yeah, not bad at all. Okay, so with that, you must have been, or not you, the company must have been on the road a lot in January. Mike was out there primarily driving, I bet.
He was.
How many days on the road?
He spent 25 full days on the road, which is a lot.
Whoa.
And 4 partial days. So he didn't have too many just full on at home days off.
Yeah, I was just gonna say, so
Yeah.
he's really paying for that Christmas vacation.
He must have. Yeah. He did some pretty quick turnarounds, a little faster than he normally does. And he was out, I think, right at the beginning of January and right near the end of January for about, trips that were almost 2 weeks. So yeah, just kind of, that's partially because of kind of how, he took Christmas off and then started right before the first of the year, and then was out for almost 2 weeks, took a little bit of a break, out for almost 2 weeks. And by that time it's the end of the month.
Right. Yeah, absolutely. Yeah. December is a blessing and a curse that way, isn't it?
It is.
Great rates, tough to stay out on the road.
Yep.
All right. So with our 25.5K in revenue, how much did we realize in profit for January then?
$6,554.69.
Hey, not bad. That's about in line with last month, with December, right?
It is. Yeah, it was pretty close to December.
So yeah, by running a little bit harder in January, you're able to realize the same amount of profit as you got in December, even paying for $1,000 of December's fuel costs.
Yeah,
that's not a bad month at all.
It wasn't a bad month. It was a good month. Especially, you also look, something similar happened with maintenance and repair expenses. I was naughty in December, and I forgot to pay a maintenance bill that should have been paid in December.
Oh.
And my mechanic, he texted me, "Hey, you got a couple bills outstanding." I'm like, oh crap. I usually try not to do that. And so some of the maintenance and repair expenses, which were, not super high, but a little bit high, part of it should have been in December. So that skewed numbers just a little bit. So, considering that, it was still really, it was a good month.
Yeah, I was just going to say, you're talking about the fuel expenses and the repairs and maintenance, bringing that number down. So it could have been even higher in different circumstances. And this kind of goes to illustrate one of the points you have talked about several times on previous episodes, which is there's a certain threshold. You need to be out on the road a certain number of days, a certain number of miles to break even. Or to turn a profit. But then there's, every 100 miles, every 1,000 miles on top of whatever that threshold is going to start exponentially increasing your profit, right?
Yep. Absolutely. Because your fixed costs are covered, and, you're paying a certain amount for insurance every month. Your truck payment's a certain amount. Your trailer payment's a certain amount. All that's the same, whether you run 1 mile or 15,000 miles. And so, the more miles you can run after those fixed costs are covered, that just more money goes to your bottom line.
Well, good on you, Mike, for a great month, and well done, Chris. So, anything else from the numbers, from the P&L or the balance sheet that we want to pull out and talk about, or anything upcoming that you're anticipating in the coming months?
No.
Okay. All right. Well, let's move on then to our last segment of the day, which is the impact tip. Chris, what do you got for me today?
Be intentional about what you do with your money.
Okay, fair enough. What do you mean by that?
Basically, that just every dollar has to have a purpose. You've got a certain amount of money that you got set aside for fuel, a certain amount of money set aside for maintenance and repairs, and a certain amount you pay your drivers. And if you're an owner operator, you should be paying yourself a certain amount, just like you were a driver. So you just want every dollar to have kind of that purpose. And, I've talked about this before, but I hate it when owner operators don't pay themselves like a driver, because when
they just pay themselves,
they just
out
kind
of the profit,
willy-nilly pay themselves. I'm going to pay myself this much this month or this much the next month. You should have, again, kind of piggybacking off of one of the more recent impact tips, is you need to have a personal budget set aside, and this is how much money I need to live personally. And, you're intentional with that money, and you bring that much money out of the business every month, and everything else gets it's kind of sacred. And one of my biggest pet peeves is when business owners use their business as kind of their personal piggy bank. They commingle funds. We've talked about that in the past. They go and buy their cheeseburger with their business funds. I need a new TV. I go to Best Buy and buy the TV out of my business funds. That's just, it's a terrible practice. It gets a lot of people in trouble, because you're taking money out of the business that the business needs to to thrive, and you end up starving the business at some point.
Yeah, absolutely. With that sort of thing, would a rule for that be if you can't expense it on your taxes, then you can't put it on your business card?
Yeah, absolutely. If you can't justify an expense as a business expense, and the IRS, I can't remember the exact terminology, but so I'll paraphrase it, but it basically has to be used for the business and a reasonable expense. And if it's not, then you can't really expense it, and you shouldn't be buying for whatever that is out of the business.
Yeah, absolutely. All right, well, I suppose we'll leave it there for today then, Chris, unless you have any final thoughts on anything that we've talked about today.
I'd just say, that money, just don't let that be an afterthought and something that just happens. You have to control your money, and if you don't control your money, that money is going to control you. It's going to control the business decisions you make, and you want to be in control there. Absolutely.
I feel like we need to, one day we're going to have Haulin Assets merch that people can go buy online, and we're going to have t-shirts all about saving money, being intentional with your money. It's the theme of this podcast, I think, that you've created here, Chris, is essentially this, being intentional with your money.
Yep.
It all boils down to that. All right, well, thank you so much for listening, everybody. Thank you for downloading this, for sharing this with whoever might find it valuable. We really appreciate your help getting the word out about Haulin Assets. I hope you enjoyed this episode and our entire backlog, which you can find at haulinassetsllc.com. Make sure you find us on Facebook as well, and leave those awesome 5-star reviews in whatever iTunes is called these days.
I think it's still called iTunes.
I think it's Apple Podcasts.
Oh, okay, whatever.
Yeah, if I recall.
I mean,
correctly.
you're the professional. You'd know better than I do.
You'd think I should, but they change it every couple of years, so I stopped trying to keep track. I'm old, Chris. Okay, I'm an old man filled with regret, waiting to die alone.
What does that make me?
We don't want to talk about that. All right, well, this is going off the rails now. See you guys.
See you soon.